A very good morning to all my dear students. Good morning, children. Good morning, Khushbu and others, those who have joined with us on the portal. Today, we are going to have a quick recap of FEMA, that is Foreign Exchange Management Act. So I hope you have been preparing well for your exams and you all are geared up for a revision of FEMA session today. What is FEMA and what are the rules and regulations? What are all the capital current account transactions? We are going to discuss in detail in today's session. Okay, and the chat box is open for you. If you want to have any interaction, you want to ask any questions, you can ask in that as well. All right. So welcome to today's session. That is, the topic name is FEMA. And what all we are going to cover in this chapter. First of all, we'll be covering about the definitions and how the regulation and management of foreign exchange is done. So we have two types of transactions, current account transactions, which are divided into three different schedules, Schedule 1, Schedule 2, and Schedule 3. And after that, there are certain capital account permissible transactions. What is the meaning of permissible? Means these are the transactions which are allowed, for which no permission is required. So we have those transactions in Schedule 1 and Schedule 2. The preamble of FEMA says that it applies to consolidate and amend the law relating to foreign exchange with the objective of facilitating external trade and promoting the development and maintenance of foreign exchange market in India. So why FEMA has been made? Before FEMA, we were having FERA, that is Foreign Exchange Regulations Act. But now it has completely replaced by FEMA, that is Foreign Exchange Management Act. So this act, children, basically tries to give us the laws which are relating to foreign exchange in India. That means if you are trading outside India, you're sending your exports, you're receiving the payments in dollars. When you are getting the goods from US or any other country, we are giving rupees to them. So the foreign exchange, how this foreign exchange movement is happening, it describes the laws related to that particular thing. So government, as a part of liberalization, permit free movement of foreign exchange. So government is allowing free movement of foreign exchange. So that's why we have FDIs, that is foreign direct investments in India. If government will prohibit, then nobody will invest in India. Now, because of globalization, so many offices have been opened up. Indian offices are getting opened up in abroad. People in abroad are opening foreign companies in India. Remember, in the previous lectures, we have discussed about companies incorporated outside India. So if they are having a place of business in India, it becomes a foreign company. So that is why it is important to regulate the foreign exchange. Then only we can allow the foreign investments to float in India. Now, this act was enacted and made applicable on 1st June 2000. So it's a very new act. It's a very new act. It has recently come into picture, that is from the year 2000, and it helps in the management of foreign exchange reserves of the country. RBI will have the overall control of the foreign exchange transactions. So why RBI is involved? Because RBI, all of the money in charge is Reserve Bank of India is taking control of all of the money. So now if our rupees is going outside or your dollars are coming inside and you need to exchange those dollars for rupees, so RBI has to regulate the overall control on the foreign exchange transactions. Separate directorate of enforcement has been formed, but still RBI has the overall controlling body for the forex. Now, does FEMA extends to whole of India or it is only for few states? It extends to whole of India. And also to the branches and offices, agencies which are outside India controlled by a person resident in India. Now, the very important definitions of FEMA are who is a person who is a resident in India and who are the people who are not considered to be a resident in India. So although it extends to whole of India, but also any branch office which has been formed outside India. So if there is a person resident in India, Mr. A, he has opened up an office in China. So is FEMA applicable to that branch of China also? Tell me, yes or no? Can we say that FEMA is applicable to that branch office which has been set up outside India? Yes, absolutely correct. It is applicable because any branch office set up outside India, because it is being controlled by a person who is a resident in India. All right. And to any contravention committed outside India, this act also applies to any of the contravention. Penalties will be charged accordingly. So we will be talking about the preliminary session, regulation and management of foreign exchange, how it is regulated, who are the authorized person, contravention, penalties, and miscellaneous. So this is the broad structure of the FEMA. Let's begin with the definition. That is the first definition. Who is an authorized person? Now, children, tell me one thing. If you are planning to go to any other country where your currency of rupees is not being used, any other currency, that is foreign currency, means any currency other than Indian currency. What is Indian currency? Indian currency is your rupee income. So if you're not using rupees, you're using dollars, you're using yens, you're using pounds, any other currency that you're using is a foreign currency. Now, if you want to go to any other country, say for example, you're traveling to US, you need dollars for that. So who is going to provide you these dollars? That is an authorized person. Authorized person means number one, an authorized dealer. That means he's a dealer who deals in this exchange of foreign exchange. Or the money changers, there are certain banks which help you to replace the rupees in exchange of dollars. Offshore banking units, or any other person who has been authorized under Section 10, subsection 1 to deal in foreign exchange or foreign securities. So authorized person, you have to remember these four important points. Children, FEMA is all about understanding and learning because it has lots and lots of theory. So you cannot say that if I've understood the FEMA, I don't need to learn it. You have to learn it a lot. Learning is mandatory, but at the same time, this chapter is very, very scory because direct, straightforward questions also come. If you have learned it well, you have understood it well, you can write the answers as it is. So when you have such typical theoretical chapters, then you have a benefit also because इसमें कुछ बनावटी सा question ही आएगा. इसमें straightforward question. For example, if you get a 2 marks definition, who is an authorized person? We have learned the definition, well and good, just write. So who is an authorized person? Basically, you have to keep in mind the picture of the bank that you go to exchange the money. You are traveling to US, now you need exchange of money. So he's an authorized dealer, money changer, offshore banking unit, or any other person who has been authorized to deal in what? To deal in foreign exchange and foreign security. It can be the foreign exchange you're dealing or the foreign security. Now, ma'am, foreign currency we have understood, anything other than rupees. But what is foreign exchange? Foreign exchange means foreign currency because you're using foreign exchange for foreign currency only. Why will you use if you're just taking rupees outside India? If you're going to any other country where rupees are only being used, for example, Nepal, why would you need any approval? Why would you need foreign exchange? You need foreign exchange only when the foreign currency is involved. And any deposits, credits, balances which are to be payable in foreign currency. So foreign exchange means I have to pay any money outside India in US dollars. So I will be using the word dollars, which means foreign currency. It is not that only dollar is foreign currency. All these yens, pounds, euros, everything other than rupees is foreign currency. But just to make you understand, by using any one particular currency, I'll be using the name of dollars. Okay. So if I have to make the payment in dollars, then that is foreign exchange. Any traveler's checks, letters of credit, bills of exchange, which are drawn in Indian currency, but they are payable in foreign currency. Means actually they have been made, drawn means they have been drawn, like bill of exchange, any check you have drawn, any payment to be made, it was drawn in rupees. But actually the payment has to be made outside India, that is in foreign currency. Then again, that is a part of foreign exchange. And vice versa, if you have any person outside India, he has drawn any bill outside India in foreign currency, but actually the payment is to be made in India. So it is all about your imports and exports. When you're sending goods outside India, you will be receiving payments from US in dollars. So foreign exchange is involved. When you are importing goods from outside, you will have to pay rupees. So bill will be drawn in rupees, but the payment has to be made in foreign currency. So all these kind of payments where foreign exchange is involved is exports, imports can be the best example. Foreign security means any security. Now, what is security? We have been understanding security means shares, debentures, bonds, stocks, everything. But then here it is in foreign currency, where redemption or returns or dividends is payable in Indian currency. So you have taken up any securities in foreign country, but the dividend pay has been payable to you as in Indian currency. Then again, there is a foreign exchange involved. Foreign security is coming under the same definition. Now, another important definition, capital account transactions. Children, I will be rushing through the chapter because it's a very huge chapter. and only one session we have for the revision. So we will be, fatafat se we'll be completing the definition so that we can move to the major content of your schedules, because it has lots and lots of explanation required over there. So capital transaction is a transaction which alters. What is the meaning of alter? Alter means to change, where you're changing any assets or liabilities, including a contingent liabilities outside India of a person resident in India. So you are trying to change the, now you are a person who is, since you have not understood this definition of person resident outside India and inside India, so there might be confusion. As of now, simply remember your assets are lying outside India. You have taken certain assets in Dubai. Now, either you are selling those assets or any liabilities to be incurred. That is your capital account transaction. Or a person who is a resident of Dubai has taken any assets in India. He is altering any assets. Altering means changing. या तो बढ़ रहा है या घट रहा है. Whether it is increasing or decreasing, that means alteration is happening. So any of the transactions, either the people of India are buying any property in Dubai and they are changing it, it is increasing or decreasing, or Dubai resident has bought in India and he is now buying more assets or paying more liabilities, then all these transactions will be known as capital account transactions. What is the underlining line to remember over here? Including contingent liabilities. So any contingencies arising, that is also part of capital account transactions. You cannot say it is a current account. Now, what is current account transactions? Other than capital account transactions. So whatever is not capital account, where assets and liabilities are not involved, where ordinary business is involved, that is a current account transactions. Payments in connection with the foreign trade and other current businesses, short-term banking and credit facilities in the ordinary course of business. So children, what is the major line or word used in the current account transactions is ordinary course of business. Whatever payments that you are making, whatever loans you have taken, so either you pay the interest on loans, or if any investments, you will be earning income on the investments. Any remittance you need to pay for the living expenses of your parents, spouse, and children who are residing abroad. So there is Mr. A, his wife and children are staying in US. He wants to send certain money for their living expenses so that they can eat well food over there and they can study well. So whatever remittance, whatever transaction money you are paying, that will be coming under the current account transactions. For foreign travel, education, medical care of parents, spouse, children. Now, why they have divided into capital and current transactions? So everything related to your asset and liabilities, capital account transaction. Schedule 1 and 2 of section 6 will define how they have to be treated, like this I've told you in the beginning. And then there are current account transactions where you're meeting the expenses of your wife or children, or the medical expenses of the attendant, of the people, or any other things, money that you're paying in the ordinary course of business. To those transactions, schedule 1, 2, and 3 are applicable. So these schedules will be explaining you where the permission of central government is required, where the permission of RBI is required. So in order to understand those permissions, it is important to understand the difference between two types of transactions. Is that clear? So capital asset are including contingent liabilities, also assets and liabilities, and current account is generally in the ordinary course of business, whatever transactions that you're doing for foreign trade payments, for interest on loan, income on investments, making any payments for parents, children, medical expenditures, foreign travel, or for the living expenditures of parents and spouse who are residing abroad. Then only foreign exchange will be involved, right? So who is a person? Person is an individual, HUA, company, firm, association of persons. Association of persons means जो लोग मिलकर together अपनी एक association, organization बनाते हैं to do a business, or body of individuals. Whether incorporated or not, any artificial judicial person not falling within the above proceeding subclauses, so company, any other artificial judicial person means a body corporate, any agency, office owned or controlled by such person. So the definition of person is important to understand, because you will be talking about a person resident in India, person resident outside India. So कौन-कौन हो सकते हैं वो person? Individual हो सकता है, HUF हो सकता है, company हो सकता है, firm हो सकता है, anybody. Yes, a group of people. Good, Khushbu. That's correct. A person resident in India now comes to a very important definition, that is section 2, subsection 5, clause 5, which defines your person resident in India. So the basic thumb rule that you have to remember over here is if you have been staying in India for more than 182 days, if you're staying in India for more than 182 days, so this is your more than 182 days, then you become a person resident in India. What do I become? If I have been staying in India for more than 182 days, then I become the person resident in India. But if but does not include means if you're falling under this category, then you are not a PRI. Let me take a better pen. So here we are going to talk about PRI. What happened to the cursor? PRII, person resident in India, because I don't have annotation, so I'm just trying to make it understandable for all of you by using this pen. So if I'm staying in India for more than 182 days, then I become a PRI. But it does not include a person who has gone outside India in either of the cases. So if there is Mr. A who is person resident in India, when does he become person resident in India? If he has stayed in India for more than 182 days. Understand, ma'am? But if Mr. A goes out for employment outside India, or for business outside India, or for any other purpose for uncertain period. So we say these are the three specified purposes. So if you go outside India for either for employment, so now he's going to US for studying further for employment purposes, or he's going to do a business or vocation outside India, or he has got married over there and doesn't know for how long he's going to stay over there. Then what does he become? Then he becomes the person resident outside India. So if I have stayed in India for more than 182 days, but I went outside India for three specified purposes, then I become person resident outside India. And if I have gone outside India for other than these purposes, then I remain PRII only. This is called carry forward of the status. Then if the previous financial year I was PRI, then I still remain the person resident in India only. My status will not change. Everyone is clear till here. More than 182 days, I go outside India for three purposes. I become PROI. If I'm going other than these three purposes, then my status is carry forward. If I was PRI, then I become PRI. And it does not include a person who has come to India otherwise than for these three purposes. Now, this line is very interesting. Means if you are coming to India for these three purposes, then yes, you are PRRI. But otherwise, then for these three purposes, that means you are not coming for employment, you are not coming for vocation, you're not coming for uncertain period, then my dear, you become PROI. If you're going out for these three purposes, you become PROI. If you're coming to India for three purposes, you become PRI. सिंपल थंब रूल. इतना अगर आपने याद कर लिया ना तो आपको कभी भूलेगा नहीं. आउटसाइड इंडिया गया, PROI बन गया थ्री पर्पस के लिए. इनसाइड इंडिया आया, थ्री पर्पस के लिए PRI. You want to understand it with the help of table? Let's go over there. So it says during the relevant previous year, he resides in India for more than 182 days. Yes, ma'am, I resided in India for more than 182 days. Then what do I become? If I have resided in India for more than 182 days in my relevant previous year, then what do I become? You have to answer me, children. Yes, Sarchana, Khushbu, all the others who are there in the class. Mr. Vijay Multani. Yes, good. Then I become person resident in India. And now we have to understand over here is this flowchart is very, very interesting. So I have stayed in India for more than 182 days. Then it is, did I go outside India? Did I go outside India during the current year for three purposes? Now, if I'm going outside India, yes, I went outside India and I went for these three purposes, then I become PRO. I went for other than these three purposes, I remain PRRI. That is my carry forward of status, whatever I was the previous year. But if I did not go outside India, then what do I remain? Then if I've stayed in India for 182 days, then I remain PRI. Then there is no change in the status. Okay, clear? First table is clear to all of you. Now let's understand the second table. If I have not stayed in India for more than 182 days, then simply I become PRO. But if I'm a PROI, and I have come to India for these three purposes, then I become PRII. And if I have not come to India for these three purposes, any other purposes, then I remain PROI. That is my carry forward of status. These both are my carry forward of status. What is the meaning of carry forward? Whatever I was in the previous year, I will remain the same. So now my audience have to answer me this question. There was Mr. Ray, who is a person resident in India, and he goes outside India for employment purposes, or for business or vocation outside India, or for staying outside India for 3 years, more than for the uncertain period. Then what will be his residential status? If he has gone out of India for any of these three specified purposes, then what will be his residential status? Very good. Then he becomes person resident outside India. Excellent. Khushi, Khushbu, Archana, all of you. It is absolutely correct. Then he becomes person resident outside India. If I have stayed outside India for less than 182 days, if I have not stayed in India for more than 182 days, then what is my residential status? If I stay in India for less than 182 days, then what is my residential status? Then simply, ma'am, I'm person resident outside India. Then there is no problem only. But if I'm a person resident outside India and I came to India for these three purposes, any of these three purposes, either for employment or for business or vocation or for uncertain period, then what do I become? Then I become a person resident in India. Excellent. Very good, children. That means you have understood it carefully. That's wonderful. All right. So now let's understand. So everyone is clear, because if you're not clear with this definition, then things will become very, very difficult. But what I like about the study material is this table. It is exactly given in the study material also. If you remember this table, then nothing will go wrong, because lots and lots of theory is given in the chapter. So that is for better understanding. But if you have understood this thumb rule that if you have stayed more than 182 days, teen specified purpose, gone outside India, PR. Coming to India for these three specified purposes, PR. All right. Okay. Now, dealing in foreign exchange. Who can deal in foreign exchange, children? Can you or me or I, any one of us, we can deal in foreign exchange? No. No person can deal in foreign exchange or transfer the foreign exchange to any person not being an authorized person. So who can do that? Only an authorized person. And who is the authorized person? Who is the authorized person? Ma'am, you just taught us in the beginning of the session. Authorized person means an authorized dealer, money changer, offshore banking unit, or any other person who has been, for the time being in force, has been informed, then that person will be considered as the authorized dealer. He can only make the payment for the credit of person resident outside India and anyone. So you want to make payment to anyone in Canada, only the payment can be made with the help of authorized person. He receives any payment on behalf of person resident outside India in any manner, otherwise then through an authorized person. So it is not possible that if you're receiving, say for example, your uncle is staying in USA and you want to receive certain money from him, authorized person is involved, then only you can receive the money. Enters into financial transactions in consideration or association with acquisition, transferring of the right to acquire any asset outside India. Now you want to purchase a house in Dubai. In the building Burj Khalifa, you have heard that there are nice, beautiful flats coming up at a concessional rate. So you want to buy a flat over there in Burj Khalifa. You want to enter into financial transactions in India. You will enter the transactions because you're buying the asset outside India. So Dubai people has put up an exhibition over here in India, and now you want to make the payment to them. So dirham is the currency which is being used over there. So how will you make the payment? Will you make the payment in rupees? No, ma'am, we need dirham for that. So where will you go? You will go to the authorized person, authorized dealer, any respective hotel who is doing in the foreign exchange dealings, or any authorized dealer or any offshore banking units, or any other person who has been authorized. They will give you the dirhams in exchange of rupees, and then only you can proceed with your transactions. That is the meaning of how we deal in foreign exchange. We always deal through the authorized person. Everyone understood section 3, because section 3 is again very important. So where your payment is received with regard to inward remittance, it should have been received by any person, but not through not other than through an authorized person. Financial transactions, again, these are basic meanings where you're making the payment to anyone. So these are all basic meanings. Now let's talk about regulation and management of foreign exchange, that is, which speaks about your foreign exchange, how to regulate and how to manage it. So holding of foreign exchange, section 4 says, except as provided in the Act, no person resident in India can acquire, hold, own, possess, or transfer any foreign asset or any foreign security outside India, any immovable property outside India. So how you can do it? You can only acquire and hold the property outside India as per the provisions of this Act. You cannot do it without the provisions of this Act. So section 4 simply tells you that it is not possible to hold the foreign exchange outside India very easily. You can acquire, hold, own, possess, or transfer. What is the meaning of this lines? Acquire means you can purchase. After purchasing, you're holding it. Yes, you can hold. Can you be the owner? Yes, you can be the owner. Can you possess it? Can you have it in your possession? If you have purchased it from someone, can you take it in your possession? Yes, ma'am, we can take it. Can we sell it? Transfer means that you can sell it also, but you can do all these things only as per the provisions of this Act. All right. Now let's start with the current account transaction, section number 5. Any person may draw, sell, or foreign exchange to or from an authorized person in current account transactions. So public in central government and public interest are in consultation with RBI impose certain restrictions on the current account transactions. So there are certain current account transactions which have been restricted. Suppose import of machinery for installation in a factory from UK vendor by payment. You want to import any machinery from a UK vendor, you need foreign exchange because you're doing it for the purpose of business. Technicality, FEMA also, it is a liability outside India, and current account transactions, short-term banking and credit facilities are the ordinary course of business. Therefore, it is known as current account transactions. So whatever transactions that you're doing in the nature of current account will be monitored over here. PRI gives PRO a gift in Indian currency. For the PRO, it will be the funds lying as the alteration of Indian assets. So if you're altering any of your assets, you are doing any kind of alteration in your creation of asset and liability, then it is a capital account transactions. Current account transactions are freely permissible unless prohibited, and capital account transactions are prohibited unless they are generally. So you cannot do any kind of capital transactions unless they are permitted, and current account transactions, otherwise you can do them, but there are certain transactions which are restricted. So that is why, children, 3 different schedules have been made for understanding these different kind of transactions. So let us begin understanding with the schedule number 1. Swati, that example simply tries to tell you where you are trying to alter your any of the capital assets inside India or outside India, where you're trying to give them any alteration is happening of the asset, either it is increasing or decreasing or liability is created. It is a capital account transaction, and anything that you're doing in the ordinary course of business, like import, export of the things, you're importing the machinery, you're making the payment for that, that is a current account transactions. Okay. And also, Swati, again, we will be doing in detail about these capital account transactions. So you will understand this in detailed meaning under the capital account transactions here. Is that clear, Vicha? Okay. All right. Now, the transactions for which the foreign exchange is strictly prohibited. That means you can write down in your notebooks over here in for these transactions, we no foreign exchange is allowed to be used. For these respective transactions, no foreign exchange is allowed to be used. What are these transactions? Number one, remittance out of. What is the meaning of the word remittance? Come on, tell me. What do you understand by the word remittance? Remittance means you're remitting the money outside India. You're paying the money outside India. So can you remit the lottery winnings? So there was Mr. John who came to India and he has won lot of lottery tickets in India. He has invested in the lottery tickets and 1 crore rupees he has won. Can he take this lottery winnings outside India? He was from USA. Now he wants to take this foreign exchange of lottery winnings outside India. So he went to the authorized person. He said, I want to exchange this foreign exchange in US dollars. Can he be allowed to change that? Has he earned this income? It is just by luck that he is winning from either from racing, riding, or any other hobby that he has. He has won money because of that. So he is strictly prohibited. He is not allowed to. No transfer is allowed. Very good. No, nobody can take the remittance out of lottery winnings. You cannot take these money outside India. Just a second, children. I need some water. Yes. So any remittances that you're making out of lottery winnings, that is strictly prohibited. You cannot use the foreign exchange for sending out the money won from the lotteries. Now, sometimes you have participated in some racing or any horse riding or any other activities. That money is also strictly prohibited. You cannot take that money from India to any other outside country. After that, same third point is similar lottery tickets, banned magazines, something which is banned in your country. You try to purchase it from any other country and now you're emitting foreign exchange for that. That is strictly not allowed. Football pools is also kind of games that you're investing. It is a game in UK where you win and lose, and accordingly you are at sweepstakes is again you are just putting at stakes. You are winning the money. So by luck, whatever you are winning, all these monies, you cannot exchange the foreign exchange for these kind of transactions. It's strictly prohibited. Yes, it is a kind of a gambling because it is not from any fixed source of income. Yes, Khushbu, that's absolutely correct. Payment of commission on exports made towards equity investment in joint ventures or wholly owned subsidiaries abroad of Indian companies. Now, this is something which is very interesting. What is it trying to tell you over here? Now, this point says that if you are paying commission on what? You are making any payment of commission on the exports. First of all, you are doing exports outside India. There is a company ABC Limited in India and there is a company that they have opened up in USA, that is DEF Limited. Now ABC Limited wants to make this DEF Limited as their subsidiary. So making their subsidiary means more than 50% of the share capital shall be held by ABC Limited. That is correct. So now instead of investing money in this company, it can either be a joint venture that they're having or it is a wholly owned subsidiary of Indian company. Means an Indian company ABC Limited is having a joint venture or a wholly owned subsidiary outside India. Now instead of investing money, they have done equity investment in this company. What is the meaning of equity investment? Means they export the goods to them. They said instead of giving you money, we are giving goods to you. The capital investment, equity investment, where we're not doing capital investment, we're doing equity investment in these kind of companies. Now, when such exports are done in US, then you need certain agent who will be selling your goods because this company, what is this company doing? This company take the goods from Indian company and they sell the goods and whatever money they get, they remit it to India back. So now it says that they are just doing an equity investment. It is its own company, wholly owned subsidiary, or it is a joint venture. They are not getting anything in return for that. So why there is need of paying commission on such exports? So law said, somebody said that we are going to pay commission to them on such exports. So there is an agent, Mr. A, who is selling the goods on our behalf. We have sent the exports to him. We're paying the commission. So it is strictly prohibited. This kind of commission, if you have this kind of structure where you're exporting the goods as an equity investment way for to foreign company, which is your wholly owned subsidiary or joint venture, then you are prohibited from paying any kind of commission on such kind of exports. Have you understood, children? Fourth point. I hope now it's crystal clear to all of you, this point. Now let's move to remittance of dividend by any company to which the requirement of dividend balancing is applicable. Now, what is the meaning of dividend balancing? See, for example, I am a company, Indian company, and I had to pay money to US company, and US company has to pay certain money to me. I have exported the goods to US company and I was to receive rupees from them. And at the same time, this foreign company has invested in shares in my Indian company and I need to pay them the dividend. So I try to knock off this entry that neither you will pay me the money nor I will pay you the dividend. We'll do the dividend balancing, although it is not now applicable. So any such kind of remittance of dividend which you are doing by dividend balancing applicable, that is also strictly prohibited. Means you cannot do this kind of things where you are doing a dividend balance. Another thing is where the exports are being made under the rupee state credit route. Rupee state credit route means it is the route in which only we are going to accept rupees. We are not going to accept any other dollars. So now we are sending the exports to US. US is giving us the money. Now, or we are importing the goods from US. We are sending them money, rupees. Again, we are importing, we're sending. Now, US has a lot of rupees currency together. Now, next time when we export the goods, they also send us the rupees back. They don't exchange the foreign exchange, they're sending us the same. So under rupees state credit route, only rupees are being used. You're not using any other thing. So there is no need of payment of commission on such exports. You will not get the foreign exchange because the transactions are being done in rupees only. Yes, you want to pay commission in rupees, you can pay, but under rupees state credit route, you cannot use the foreign exchange. Simple. So how will you learn the fourth point? Equity investment tha, bahar joint venture, wholly owned subsidiary. You cannot pay the commission on exports. Dividend balancing is applicable. You cannot remit the dividend outside India then. You are doing the exports under rupees state credit system, then again, you cannot remit the commission on such kind of exports. Except where the commission is on 10% on the value of invoice of tea and tobacco. Now, tea and tobacco is something which is very, very common in India. So everybody is either addicted to tea or they're addicted to tobacco. So here, if you are exporting these kind of goods, then invoice value of 10% of the invoice value commission can be allowed. Otherwise, it is strictly prohibited. Otherwise, it is strictly prohibited. But for just for the tea and tobacco, the commission of 10% of the invoice value, say for example, 10,000 is the invoice value. So 10% of 10,000 will be allowed as the payment of commission on exports. Is that clear, children? And the seventh point is payment related to callback services of telephone. So examiner will ask you, there is a callback service of telephone. It is a prohibited or a permissible current account transaction. So you will say payment related to callback services of telephones fall under schedule 1 of current account transaction, which is strictly prohibited. These are the transactions for which withdrawal of foreign exchange is strictly prohibited. So it is not allowed. So callback services means where you try to give a missed call to any other company in foreign country, and then they call you back to give you certain consultancy or other kind of services. So whatever money that you have paid for getting this call back from the international call, then these kind of payments related withdrawal of foreign exchange is not allowed. And the last is remittance of interest income of funds held in non-resident special rupees scheme. Now there is a child who has come, Mr. John, who has come from US to study in India. It is very rare that people come to study in India. Generally, our children go outside India to study. So there is Mr. John who has come to stay in India, and during his studies, he has kept his money in a non-resident special rupees scheme account. Now, when he is going back outside India, whatever savings he have in this account, he wants to take this savings outside India. Say, for example, he has kept a saving of 1 lakh rupees in this bank account. Now, while he's taking these savings outside India, will he get the interest income on such savings? Law says if you're getting any interest income, you cannot take it outside India from the non-resident special rupees scheme account. So no interest income will be given to such account. And because it is strictly prohibited to take any interest income outside India when you have kept your money in the non-resident special rupee scheme account. Is that clear, children? All of you? Now we are going to do the transactions for which RBI approval is required and then CB approval is required. But before that, can you explain the fourth point once again? Kushbu has raised a query, so I will explain this point once again. That fourth point is very, very simple. You just have to imagine in your mind that Kushbu, you are an Indian company, Kushbu Private Limited. You have wholly owned subsidiary, A Private Limited in USA. Now you are sending the goods as an export to them, but actually it is not an export. You are doing your equity investment in that company. Instead of sending cash investment, you have invested in the goods. Now that company will be selling the goods and giving you money back to you after sale of the goods. There is no need of payment of such commission because it is your own joint venture. It is your own wholly owned subsidiary company. So if you say that now I want to pay commission also on such exports, ek to you did not get any money in India. You have exported the goods as an equity investment. You are not getting in any money in exchange of these exports. Now you want to pay commission also such on exports. So law says it is strictly prohibited. If you are sending your goods as an equity investment to your own wholly owned subsidiary or joint venture, then you cannot pay the commission on such kind of exports. Is that clear, everyone? Anyone has any doubt? Because then the things will keep on getting more complicated. If you have any doubt over here in the definition or any other points, you can ask. When he is residing in India, in case of special rupee, interest will be paid. Yes, Archana, if he is residing in India, he will be given the interest, but this interest income on non-resident special rupee scheme account, he cannot take outside. All right. Okay. So let's take a small break over here and then we will proceed further with the lecture. Let's take a small break. Let's proceed ahead. Any doubts anyone has? Anyone having any doubts? Otherwise, we'll proceed ahead. All right. All clear? So that's good. Okay. Now, current account transactions, prohibited one we have done. Now we are going to discuss about the transactions which require RBI's prior approval. मैम लास्ट पॉइंट फिर से समझा दीजिए मिस्टर विजय मुल्तानी. Vijay Multani, which one you have not understood? Which point you have not understood? The last point is related to non-resident special rupee scheme account. So here it specifically tells you that if you are a foreign citizen and you have come to stay in India, say for example, you are a student who has been studying in India. So now when you came over here, you have to spend certain money. So your parents have transferred that money in your non-resident SPR account. That is a specific account, NRSA account, that is non-resident special rupee scheme account. Now you have certain savings in this account. So while you have stayed in India, you have kept certain balance, and now after say for example 2 years, you're going back. Now you cannot ask the bankers to pay you interest on this account because we can't remit the interest on non-resident special rupee scheme account. Means the interest income on this account is not allowed to be taken outside India. Is that clear now, Vijay? All right. Now, these are the transactions where RBI's prior approval is required. Now, for taking RBI's prior approval, there are certain things that you have to remember in this kind of transactions. That is, there are different departments which have to approve. I think Schedule 2 is for your central government's approval. These are the cases in which the governments, because different departments of the government will be giving you the approval. So it should be government's approval is required. From which different departments approval is required, it depends upon your purpose of remittance. So Schedule 2 tells you about the government's approval required for the transactions. So for the cultural tours, say for example, if any of the Bollywood star is going to hold different cultural tours in different cities, even if you're spending $1 for that, then also the approval is required because you're going to the different outside place. Then you need the approval of Ministry of Human Resource Department, that is Department of Education and Culture. So examiner will give you a question. There is Mr. A who wants to hold cultural tours outside India in USA or in England or wherever it wants, or in Paris, Italy. Do you think any government's approval is required? Yes, it is written over here. Government of India's whose approval is required, which department, which ministry? It says Ministry of Human Resource Department. Their approval is required for this purpose. Now, second point is very, very interesting because this point within itself has many, many points. Okay. So this is not RBI's approval. These are the transactions where the central government's approval is required. CG's approval is required for the withdrawal of foreign exchange. Even if $1, there is no limit. Even if $1 you're paying, any amount you're paying for the foreign exchange, you need to have the approval of these departments. Now, if you want to give any kind of advertisement in foreign print media, you're giving the advertisement in Indian print media, there is no problem. In foreign print media means written. So if you're giving any audio video, that is exempt. There is no problem. If you're giving the written print media means newspapers for the printing you're giving. For the purpose other than these three purposes, means if you're going for the tourism, foreign investments, international bidding, then it is allowed. Then there is no problem. But if it is a written media ad, which is to be given by a state government or a public sector undertaking is giving, then there is a problem. Central government's approval is required or the Ministry of Finance, Department of Economic Affairs approval will be required. So who is the approval required over here is Ministry of Finance, Department of Economic Affairs. But if examiner asks you that there is a company, there is a state government which is going to give the audio video ad, then it is exempt, then there is no problem. If it is a central government unit who is giving the advertisements, then also there is no problem. When is the problem? When the ad is being given in the foreign print media and it is being given by a state government and its public sector undertaking, then yes, central government's approval is required. Okay. Now it depends upon the amount that you're using. If this print media is for the promotion, for the financial investments, and for the international bidding, then do you need the approval? Yes or no? Hurry up, tell me. It is your revision, children. You have already studied about this. Then do you need the approval? No, ma'am, then no approval is required. So if you're giving the advertisement in print media for the purpose other than these three purposes, then only the approval is required. Whose approval is required then? Ministry of Finance, Department of Economic Affairs. You have to learn these names, children, because 1 mark question comes straight away asking whose approval is required. First of all, he'll ask you, do you need the approval? 1 mark question, and second part of the question will be whose approval. So 2 marks question can come from these kind of transactions. So you have to learn it by heart, that Ministry of Finance, Department of Economic Affairs. HRD हो गया ऊपर, ह्यूमन रिसोर्स डेवलपमेंट का शॉर्ट फॉर्म होता है HRD. कल्चरल टूर करा तो HRD का चाहिए हमें. मिनिस्ट्री ऑफ फाइनेंस आपको पता ही है, स्टेट गवर्नमेंट अगर ऐड करे तो फाइनेंस डिपार्टमेंट बहुत जरूरी है. मिनिस्ट्री ऑफ फाइनेंस एंड डिपार्टमेंट ऑफ इकोनॉमिक अफेयर्स. सो स्टेट गवर्नमेंट से इकोनॉमिक अफेयर्स भी रिलेटेड. Is that clear? Now depends upon the amount. Now it talks about how much amount can be utilized for remittance if it is exceeding 10,000 USD dollar. So means only if you are exceeding 10,000 USD dollars, then only the approval is required. If the amount is less than 10,000 USD dollar, then do you need the approval? Yes, ma'am, or no, ma'am? If the amount is less than 10,000 USD dollar, then it is exempt. No approval is required. Only when the amount is more than 10,000, then only the approval is required. Archana, international bidding means any kind of investments you're doing over there, or like we have auction sales over here and you're inviting the bids. Now you're doing it internationally. Okay. All right. So in case of a state government and public sector undertakings, if they are doing it, then the approval is required. Okay. If central government is doing, Swati, then no approval is required. Remittance of freight of vessels. Now, these next 2 points are very, very simple because they are again related points. Again, these points are very much related to each other. Talking about the remittance of freight of vessel. What is the meaning of freight? Freight is the charges that you're paying when the goods are being imported. You need to pay certain amount of freight for the ship that is being chartered. Now, again, this ship is being chartered by a PSU, that is a public sector undertakings. If Reliance is taking or any other private company is taking, then no permission required. Similarly, in foreign print media also, children, it is specifically talking about state government. If state government or PSU is doing, then approval is required. If private company is doing, if central government is doing, then no approval is required. Is that clear? You can write it down over here in this. If central government and private company is doing, no approval is required. Same for here. If central government or any other private or private company is doing, then no approval is required. It is only for the public sector undertakings. If they are paying any freight on the ship which is chartered the goods, import of goods is happening, and now ship has been used for importing the goods, you are paying freight on such kind of goods in dollars, then you need to take you can do it, but you need the approval of Ministry of Surface Transport. MST, Ministry of Surface Transport. For the next one also MSTs. So you have MSTs in your BCom. That is how you have to remember Ministry of Service Transport. Or you can remember MOST, that is Ministry of Service Transport, MOST. Okay, chartering wing. So two are the important ministries of surface transport. In two transactions, it is required. One, when you are paying the freight for the ship which is being used by the public sector undertaking, or you are importing through an ocean transport by a state government on CIF basis. CIF is your cash insurance freight. Other than on FOB and FOB. FOB is free on board. So you don't, you're not paying freight over there. So if it is FOB, then no approval is required. If it is FAS, then no approval is required. But if it is on CIF basis, yes, ma'am, then approval is required. Simple. So both the points are related. उस पे सिर्फ freight की बात करिए. इसमें proper import happening through the ocean transport by a government department or a PSU, then you need the approval of Ministry of Surface Transport. Cost insurance freight, yes, that's absolutely correct. All right, then you need the approval of MOST, MOST, that is Ministry of Surface Transport. I'm glad I've found these pens so that it becomes more easy for you to understand. And again, multimodal transport operators making remittance to their agents abroad. Sometimes there are multimodal transport agents, children who are getting the business for India. And now, if they're making their payments to these agents, they have kept their agents in abroad. Then again, they need the approval from the Director General of Shipping. A registration certificate is required. They need to show their registration certificate that they have received from the Director General of Shipping that yes, these are the transport operators. Then they can, multimodal transport operators means you're using multimodal transport. First by road they are coming, and then by a ship, and then by train they're going. So you have taken the registration certificate from the Director General of Shipping. Then only you can make the payment to these agents who are sitting abroad. Again, MOST is being used over here also. Any container detention charges exceeding the rate prescribed by Director General of Shipping. तो ये लिख लिख कर लर्न करना पड़ेगा. Director General of Shipping. Shipping में कौन होता है? Director General होता है. Okay, Kavita, that you simply remember FAS and FOB basis, then it is exempt. Okay, don't go into the meanings because then they have huge meanings in their own. Freight is being paid in different ways. Okay, free on board FOB. So if that is the case, then it is exempt, then no approval is required. Okay. Now, container detention charges. What is the meaning of this line now? What is container detention charges? Sometimes, what happens is the ship is standing at the port, it is waiting for the goods. And now the detention charges are to be paid for this ship waiting to the port authorities. So say, for example, there is a Visakhapatnam port and the ship has to go to England from there in India, but the goods have not come yet. So it has to wait over there. Detention means waiting charges, detention charges. So they need to pay certain detention charges for this container waiting over there. Container किसके लिए यूज है? Container detention means ship की waiting के charges जो वहां पे रखते हैं. अगर तो वो within the rate है, which has been given by Director General of Shipping, then no approval is required. But if it is exceeding the rates given by the Director General Shipping, then approval of MOST is required, that is Ministry of Surface Transport. The other one is for chartering wing, here Director General of Shipping. So two places Director General of Shipping is coming where multimodal transport is being used, then remittance of container detention. So 4 cases you have to learn for the ship business. First one was cultural tools. Second is for the advertisement. Foreign print media में करा, other than वो वाले 3 purposes करा, exceeding $10,000 करा, approval is required, and by state government or public sector you undertake. Then 4 cases you have learned is for the ship charges that you have to pay. Now we are doing 5th case, very interesting, remittance of hiring charges paid to transponders by TV channels or internet service providers. Now, who are these transponders? So whatever is coming in your Discovery Channel or, these National Geographical channels. So you have hired outside people who go over there in Amazon jungles and they click pictures of all these lions and tigers eating food and chasing for these animals. All these kind of, how it is highlighted over here through via internet or TV channels. It is being highlighted over here, but we have certain transponders who are working for us over there. That's how the channels are showing the same things in India over here. So now you need to pay certain hiring charges to these transponders who are helping in transmitting the data from foreign country to India. So if you are paying such hiring charges to the transponders for the TV channels and for the internet service providers, Ministry of Information and Broadcasting's approval is required, and for Internet, Information Technology and Communication. So internet को किसे याद करते हैं? IT के साथ communication and IT, communication and information technology, and TV channels is information and broadcasting is for TV channels. So for TV channels, if you're paying the hiring charges for transponders, then you have to learn Ministry of Information and Broadcasting. TV में broadcast होता है तो broadcasting, and for internet services, we simply have to learn information technology and communication. Okay? Is that clear? Now, the last one is remittance of prize money or sponsorship of sports activity abroad. So you have gone to abroad and you have won certain sports activity. You have won the prize money over there. So if it is other than international, national, state sports bodies. So these are exempt. So if it is international, prize money or sponsorship is being paid by a person, which is, if it is being paid by international body, then it is exempt. By national body, then it is exempt. State level. So it is basically a district body which is being covered. So at a local or district body, if you are paying, then if the amount involves exceed 1 lakh USD dollar. So upper paid में 10,000 USD dollar था. Sports and prize money में कितनी amount है exempt? 1 lakh USD dollar is exempt. If the amount exceeds 1 lakh USD dollar, then Department of Ministry of Human Development is required. Department of HRD. So two places Department of HRD is coming. One is cultural tools. HRD department is coming. That HRD department is for your education and culture. यहाँ पे for encouraging the youth is the sports and everything, sponsorship is being paid. If it is national, international and state level, then it is exempt. If the amount is 1 lakh USD dollar, then it is exempt. Only the if amount is being paid more than 1 lakh USD dollar, other than these three people, then approval of HRD is required. Which department? Department of Youth Affairs and Sports. And the last one is Ministry of Finance Insurance Division. If you are paying the membership fees for P&I Club, that is Protection and Indemnity Club. Please write down what is P&I Club, that is Protection and Indemnity Club. Yes, Swati, it can apply depending if you're paying the hiring charges to the transponders in abroad. If they are doing activities over here only and then the payment is being made, then no approval is required. Only if the foreign exchange is being involved, then the approval is required. Okay. So membership fees for protection and indemnity means whatever protection, indemnity, insurance you have taken for your ships and other things, insurance division's approval is required for this kind of Ministry of Finance. Insurance division's approval will be required. Is that clear? So we have done all the facilities related to the donations, approvals required by the central government and the prohibited transactions, current account transactions. Now we are going to move to the current account transactions where RBI's approval is required. Now it has come up where RBI's approval is required. The previous one, central government's approval is required. Here we require the approval of, why this sign is coming, okay. Here the RBI approval is required. So individuals can avail the foreign exchange for the following purpose within the limit of 2,50,000 USD dollars. Now children, it is very, very detailed studies given in your study material. So I just want to take up the things from the study. So that you don't feel that anything has been left out even in the revision. Now anyone can recall what are the cases where the approval of RBI is required? Also, I want to do certain questions with you. So this is what we have done, PRRI and PROI. This is the exact definition, the first limb, second limb. If a person resides in India for more than 182 days in the financial year 2021, then for 21-22 also the person will be Indian resident. One have to consider the residential status during financial year 19-20 and so on. That means for the previous year you have to see. Okay. This all we have already done in detail. If the person has resided in India for less than 182 days, then he becomes PROI. He has come to India for carrying on the business. He intends to leave India on 2021, 30th April, and he leaves India on 30th June. Determine his residential status after departure. So children, if he is considered as person resident in India from this because he has come to India for business purpose. I told you, even if you're a PROI, you have stayed less than 182 days. But if you have come to India for any of these three purposes, you become PRI. He could be an Indian resident from 1st April 2021. But if he leaves India for taking employment or any other purpose, then he had to indicate his intention for uncertain period. Then again, he would cease to be a person resident in India from his departure because then he becomes a PRO. Even if Mr. X is a foreign citizen, he has not left India for any of these purposes. Therefore, he continues because now they have written that he has not left India for any of these three purposes. So he continued to be person resident in India. It is the purpose for leaving India which will decide his status from 1st July 2021. So till 30th June, he will be counted as PRI. Okay. Mr. Z has resided. He left India on 1st August for US for higher studies for 3 years. What would be his residential status? Now it is RBI's amendment that has been made over here, which says that the students will be considered as non-resident because students generally start taking care of themselves, their stay and cost of studies. Therefore, if any student is going, this is a very important amendment which has been come out with the RBI in 8 December 2003 that if any child is going for studying abroad, even if he has not stayed in India for more than 182 days, he will not be considered as a person resident in India. Okay. This is a Japanese company. Again, you would have read this case, headquarters in Mumbai, having a branch office. So it is about the companies. If it is incorporated and controlled by a person resident in India, it will be person resident in India since it is headquartered in Mumbai, which is inside India, and it controls the Singapore branch also. The Singapore branch will be considered as a person resident in India. Miss Alia's example, you simply have to remember in this example. Yes, Pooja, that is absolutely correct. I will be explaining you these points in a while. Miss Alia's example, because if she had been employed by the Indian business only, then she would have been considered person resident in India. But since he's flying from India to outside India in Mumbai, she's coming and then she's going back because she's hired by British Airways. Therefore, she will not be considered as a person resident in India, even if she's stayed in more than 1 or 2 days. All right, all right, all right. Now let's move to the schedule one transactions. All these transactions we have seen. We have seen all these schedule two transactions also. Now we're going to discuss about the schedule three transactions. That is RBI's approval is required. So first line is very, very important. Individuals can avail the foreign exchange facility for the following purposes within the limit of 2,50,000 USD dollars. So there is a liberalization scheme which tells you that up till 2,50,000 USD dollar, which somewhere roughly in Indian currency terms are to be rupees 2 crores. So if you're just taking 2 crore rupees outside India, then it is allowed. But more than 2,50,000 USD dollar, if you want to take outside India, then the approval of RBI is required. Is it required for a single transaction? You have to see 2,50,000 or all the transactions taken together? Tell me, children. If I'm going for a private visit, I'm doing donation also, medical expenses also. Is it 2,50,000 for every transaction or is it 2,50,000 for all the transactions taken together? It is for all the transactions taken together because if you have spent for one of the transaction, then the balance gets on decreasing. Very good, very good, very good. Correct. All the transaction in a year is very important. Yes, that's correct. So if you're going to private visits to any country, so you have planned to go to any other country for traveling like Singapore or any place. So for up till 2,50,000 USD dollar, there is no problem. You can take the money except Nepal and Bhutan. So you don't have any permission for taking the foreign exchange to Nepal and Bhutan because it is clearly written under Schedule 3, except Nepal and Bhutan. So you cannot take the foreign currency in these countries because they generally use Indian currency only over there. So foreign currency is prohibited to be taken over here. But for any other private visits you're going up till 2,50,000 USD dollar, you don't need any approval. If you want to give gifts or donations to anyone, any of your resident who is studying in China or in US or in UK, do you need the approval of RBI? Yes, ma'am or no, ma'am? If you're giving gifts and donations up till 2,50,000, ma'am, no approval is required. Very good. If you're going abroad for employment purposes, you have decided to join Deloitte office in US. So now up till 2,50,000 USD dollar you can take, but beyond that, if you're taking, you need the approval of RBI. Immigration. Now you have planned to settle over there in US only. You have taken a home and you have got married over there and you're going to immigrate forever. Then also 2,50,000 you can take, but beyond that, RBI's approval is required. Maintenance of close relatives abroad. You are doing your abroad, the friends or your relatives are studying abroad. You have to pay their hostel fees, their study fees, and food and every other expenditure that you need to pay. So up till 2,50,000 it is allowed. Beyond that, approval of RBI is needed. So all these transactions need the approval of RBI only, no other departments. Then is if you're traveling for business or attending a conference, there is Mr. A who wants to attend his conference in US, or there is a training for meeting expenses. Then does he need the approval of RBI? Up till 2,50,000 USD dollar is free to carry for such conferences or the specialized training. And also there is a medical expenditure that needs to be done, medical checkup needs to be done abroad, or you're just going as an attendant to a patient for abroad for the medical treatment or checkup. Then also up till 2,50,000 USD dollar is exempt. There is no need of any. So say for example, the attendant is carrying 1,50,000 USD dollar and the medical expenditures of the person is 1,50,000 USD dollar. Then 1 lakh 50, 1 lakh 50, it is 3 lakh USD dollars. So up till 2 lakh 50,000, no approval is required. But for the balance 50,000 USD dollar, RBI's approval will be needed. Then only you can utilize this amount as per the required conditions. And any medical expenses to be paid abroad. So it is the 7th point is related to the 6th point only. The 6th point, the only difference is their attendant is also going. Here you're simply talking about the expenditures for the medical treatment. And if you're spending any money studies abroad, how much you can spend up till $250,000 you can spend, but beyond that you need the approval of RBI. And for any other current account transactions, what are the current account transactions? You go to the page number 1 where we have discussed the current account transactions, anything that you're doing in the ordinary course of business, any money that you're sending for the living expenditures abroad, any study expenditures, all these kind of transactions that you can do, they are permissible in the liberalized remittance scheme, that is for 250,000 USD dollar. You don't need any kind of approval, but in excess of the said limit, RBI approval is required. For the item numbers 4, 7, and 8, what are the item numbers? 4 is the immigration, 7 is your medical expenditures and study abroad. You can avail in excess of the liberalized remittance scheme also. Is it possible, children? Only if you have taken the requirements or certificates from the country of immigration or from the medical institute giving the treatment or the university. So you are sending your son, Mr. H, to Oxford University, and the university has given you the papers that we need 3 lakh USD dollar. Then no approval is required. You simply submit this document with RBI. You tell them that even beyond the liberalized remittance scheme, we can take this money abroad because we have got the certificate of the university saying that this much amount is required. Or during immigration, if the country of immigration has sent the requirement, or for the medical institute expenditures, you already have the documents for the medical expenditures, then you can simply produce those documents and no need of approval is required. Is that clear, everyone? If an individual remits the amount under liberalized scheme in a financial year, then the applicable would be reduced by 2,50,000 USD dollar. Means each time, for example, if you have given the gifts for rupees 1 lakh USD dollar, you have spent studies abroad 1,50,000 USD dollar. Now, how much can you spend further for these kind of activities? If you have spent for the gifts 1 lakh USD dollar and for the studies abroad 1,50,000 USD dollar, how much more amount you can spend? How much more amount you can spend, children? You have to answer me. Nil. Very good, Swati, Kavita, Pooja, Khushbu. I hope you are listening to me now. You said that the voice is cracking. Is there any problem in the voice, children? Please let me know. So then you simply need to take the approval of RBI. You can remit more amount also, but then it is within the liberalized remittance scheme. The amount is over. Beyond 2,50,000 USD dollar, you need the approval of the RBI. Okay. Now, under the liberalized scheme, the amount gets reduced. This is the meaning of amount keeps getting reduced. If a person who is a resident, but not permanently resident, then, and he is a citizen of foreign state. If he is a citizen, if he's a resident, but not permanently resident in India, and he's a citizen of foreign state. Say, for example, somebody who is a person of foreign state, Mr. A, he belongs to US. He has come to India, but he's not permanently resident in India, but he's on a deputation to the office or branch in foreign company. Either a person who is a resident but not permanently resident in India, and he's a citizen of foreign state, or a person who is Indian citizen, he has gone outside to the office or a branch in India of such foreign company. Either a foreigner is coming and working over here, or an Indian is going and working on deputation in a foreign company. Then they can make the remittance of their net salary after deducting the taxes and contribution to the provident fund and other deductions. They can send this money home for certain kind of period expenditures. So if any person in India, he is a foreign citizen, he is doing job in India, then can he send his net salary outside India, abroad? Can he send? Yes, ma'am, after deducting the taxes, after deducting the provident fund and other deductions, he can send his net salary abroad. No approval is required. Nobody's approval is required for this case. Even if it is 3 lakh USD dollar, then also he can send it without asking for any approval. All right, because it is his earned money. Then he can send this. The only condition is that the duration of this does not exceed 3 years if the resident but not permanently resident. So for this item, the residential status that you have to see for the specific job, the duration will not exceed for more than 3 years. All right, so you can get the foreign exchange within the limits mutatis mutandis means in the same way as per the liberalized remittance scheme. Is that clear, children, till here? Now let's talk about the facility for persons other than individual. Here we were talking about the individuals who are utilizing the foreign exchange. So what you have to learn over here is up till 2,50,000 USD dollar, the amount is exempt, but beyond that, approval of RBI is required. It's not that you cannot take money outside beyond that. You can take, but approval of RBI is required. Facilities for persons other than individual. So who are other than individual? Who are the persons other than individual, children? Please write me in the chat box. Yes, Vijay Multani, are you understanding? PSU is public sector undertakings, okay? Yes, government bodies, state government bodies. All right, very good, correct answers. Firm, company, HUF. Just HUF, Archana and Khushbu. What about firm, company, association of persons, body of individuals? All these people. Now we are talking about all these people. They require approval of RBI if they are sending the following remittance. Remittance means you're remitting outside India, money outside India you're sending. If you're sending beyond these limits, then approval is required of RBI. Now, every point has a limit in it. Number one point is donations exceeding 1%, because this presentation is allowing me to use the pens. So I will use the pen. So first of all, we are going to talk about the donations. Donations exceeding 1% of your foreign exchange earning for the 3 previous financial years, or 50 lakh USD dollar. It is 5 lakh or 50 lakhs, children? Please check. It is 50 lakh USD dollar, whichever is less. 5 million is given, right? So it is 50 lakhs. Yes. So it is either 1% of the foreign investments or 50 lakh USD dollars, whichever is less. So if you are having the foreign exchange earnings for the previous 3 years, for example, your previous 3 years earnings was 1 crore. So what will be 1% of 1 crore? So if it was 1 crore, so your 1% will be 10 lakh rupees. All right. So now 10 lakh or 50 lakh, whichever is less. So let's assume we are talking in the USD dollar. So let's assume the 1% of the foreign exchange is 10 lakh USD dollar or 50 lakh. So 10 lakh USD dollar is less. So this amount, whichever is less, if this much donation you're doing, then till this amount, the amount is exempt. You don't have to take the approval of RBI. But if you're using the amount beyond this amount, then approval of RBI will be required. Now, for what purpose you are using this money? We are using for creation of chairs in reputed education institutions, or we are contributing the funds not being investment funds promoted by the education institutions, or we are contributing towards the technical institutions in the field of activity of the donor company. So what kind of donation? So first point is very interesting, for creation of chairs in reputed education institutions. Now there is Mr. M who is working in your company, ABC Private Limited. You want Mr. M to go to US and study further and come back and apply the same skills and talents that he has learned in US to your company. So you are creating a chair in the education institutions, means you're creating a seat for him. You're reserving a seat for him. For that, you're giving the donation. But what is the promise? That this individual, Mr. M, is going to come back and work in your organization only. That's why ABC Private Limited is ready to spend for the education of Mr. M. So where you're reserving a seat, creating a chair in reputed educations, or you're contributing the funds which are not investment funds, but they are promoted by education institutions, or you're contributing towards the technical institutions in the field of the activity of donor company, then the amount 1% of the three previous financial years earning, that's computed to be 10 lakh USD dollar or 50 lakh USD dollar, whichever is less. So 10 lakh USD dollar up till 10 lakh USD dollar, no approval is required. Any amount to be used with the draw for the drawal of foreign exchange beyond 10 lakh USD dollar, approval of RBI will be required. All right, now here the payments are being made by company, firm, or individual. In the first case, the payments were made by individual, a human being. These are the 9 cases where the individual is making the payment. And these are the 6 cases where the firm, company, or anybody else is making the payment. So first point is clear. Second, these are the 4 cases, not 6 we have 4 cases. Commission per transaction to agents abroad for sale of residential plots or commercial plots in India. So there is an agent who is staying abroad and he's selling your residential flats in India, exceeding 25,000 USD dollar or 5% of the inward remittance, whichever is more. Their first point, whichever is less, was there. So there is an agent who is sitting in Dubai and he is encouraging people to buy the flats in Delhi or in Mohali or in Bombay in India. He's encouraging the people in Dubai to buy the agents abroad to sell the residential flats or commercial plots in India. Then whatever commission he's getting, that is 25,000 USD dollar or 5% of the whatever amount I have received. Say, for example, for this sale of flat, I have received 5 lakh rupees. So what will be 5% of 5 lakh rupees? What will be 5% of 5 lakh rupees? Hurry up, tell me. 25,000. So 25,000, the same amount has come up, 25,000 USD dollar. So let's assume it is 6 lakh rupees. Then it is 30,000 USD dollars. So 30,000 USD dollars or 25,000 USD dollar, whichever is more. So 30,000 USD dollar is more. Hence, up till 30,000 USD dollar, no approval is required. Beyond that, approval of RBI will be. Is that clear? Similarly, if you are making the payment for any project, which is for any consultancy services for infrastructure projects or for any other consultancy services procured from outside India. So what kind of amounts? 10 million amounts has been given over here. 10 million per project USD dollar or 1 million per project for USD dollars. Then up till these amounts, it is exempt. Beyond that, RBI's approval is required. And the last one is remittance exceeding 5% of the investment brought into India or 1 lakh USD dollar, whichever is higher by an entity by way of reimbursement of pre-incorporation expenses. What is the meaning of pre-incorporation expenses? Expenditures incurred before incorporating the company. So now if your company has been incorporated and you need to reimburse the pre-incorporation expenses, then up till 5% of the investments brought inward remittance or 1 lakh USD dollar, whichever is higher is allowed freely. But if it is more than this amount, then approval of RBI has to be taken. Then approval of RBI is to be taken. All right. Yes, it is a kind of a preliminary expenditures. Everyone is clear on these points, children. Any doubts still here? So I give you a break for some time over here because you need to read these points. These are very, very important points. Before taking a break, let us just do a very small, interesting point given over here about accounts that has been given over here. So the procedure or withdrawal for foreign exchange will be the same as applicable under the liberalized remittance scheme. So same the liberalized, but there is no 2 lakh 50,000 USD fixed for the company's firms. You have to follow these limits. If the transactions are not listed above, then they can be freely taken. Means only the transactions which are listed over there, 4 transactions, any restrictions hai. Other than these are freely permitted. Exemption for the remittance made from RFC account or EFC account. So it says if there is a RFC account, so जैसे current account and saving account होते हैं in India, similarly RFC account is a current account, that is a business account, that is the current account, resident foreign currency current account, and EFC is like your saving bank. So whatever money you're taking out of this, it depends upon the kind of the transactions that you're doing from the saving bank account. All right. So now we're going to discuss in a while. Our schedule 3 is almost over. We will be starting after completing all these valid points. We will be starting with section 6, that is capital account transactions. So let's take a small break over here. And my humble request to all of you, please go through all the current account transactions till then. Let's take a break. All right, welcome back, students. Let's proceed ahead. So we have already completed our current account transactions. Before we move to capital account transactions, there is a small point related to exemption from the remittance of RFC accounts and EEFC account. Now, what is the meaning of RFC account? That is resident foreign currency account. These resident foreign currency accounts are like the current accounts. Like you have a current account. What is the meaning of current account in Indian bank? If you're having a current account, means the account that you use for the business transactions. Then it says that no approval is required if you are making remittance for any of the transactions of Schedule 2 and Schedule 3 from this RFC account. So there is Mr. John who has been staying in India and he has opened up RFC account, that is resident foreign currency account, or there is an Indian citizen who has opened up RFC account. Now he wants to make the payments for his visits abroad or for any contributions, donations, or for any Schedule 3 activities of donations and this commission for transactions that we have discussed for the agent for sale of residential plots. No approval is required. If you're making these transactions from the current account, yes, current account is for businessmen. Very good, Khushbu. So if you're making transactions from this current account, then no approval is required. And what is EEFC account? EEFC is like a saving account. What is the meaning of saving account? If you have a saving account in a bank, what does it mean? Your current account is for the business people who are doing the business from that, and saving is like a salary account where you're just keeping your savings and you're earning interest in those savings. If you are making the payments of Schedule 2 and Schedule 3 from the EEFC account, that is saving account also, then also no approval is required. But for EEFC account, for the following transactions, approval is required. Okay, common people can deposit and withdraw money for personal purpose. Very good, Swati. Excellent. Yes, Khushbu. Good answers. So saving account and current account जैसे हमारे इंडिया में होते हैं वैसे ही EFC account and RFC account. So RFC account से you do freely transactions, no problem. You have to learn this. Examiner will give you a question. If you're doing remittance from RFC account for Schedule 3 transactions, do you need the approval of RBI or central government? Yes, ma'am or no, ma'am? Do you need the approval? No, ma'am, because it is exempt. And if you are doing the payment from EEFC account for Schedule 2 and Schedule 3, do you need the approval? No, ma'am, we don't need the approval. Very good, Pooja and Archana have also started answering. But only for the following transactions, yes, we need the approval. What are those transactions? Remittance for the membership of Protection and Indemnity Club. If you want to become the member of P&I Club, then if you're making the payment, then you need the approval. Commission per transaction. Now, these are same that you have done upstairs. So, whose approval is required for P&I Club? You have already done in Schedule 2. Refer Schedule 2 and tell me whose approval is required. Even if you're making the payment from EEFC account, whose approval is required? For making the membership of P&I Club, whose approval is required? Yes, very good. Excellent answers. Insurance Ministry of Finance, Insurance Division, approval is required. Very good, Khushi and Swati. Archana is saying central government. Yes, central government's approval, but which department? Kavita, good. Swati, Khushbu, all of you, Pooja, great. Everybody has started answering now, good. Okay, commission per transaction to the agents abroad for sale of residential plots USD 25,000 or 5% of the inward remittance, whichever is more. For this transaction also approval is required. RBS approval is needed, right? We have done in the upstairs. And if I'm doing it from the RFC account, then do I need approval? No, ma'am. Then no approval is required. Only EEFC account se agar hum karenge, to approval is required. Remittance made 5% of the investment brought into India or 1 lakh USD, whichever is hired by way of pre-incorporation, preliminary expenses, means the expenditures incurred before incorporating the company. If you're paying for these kind of things, then also the approval is required. Is that clear? Any doubts in EEFC and RFC account? Everybody's clear? Now, if you are roaming to Thailand, Bangkok, and you have your international credit card, can you use it? It says if you're roaming, if you're touring outside India, then you can do the payments from international credit card. There is no problem in that. It is freely exempted. There is no problem. He can incur the expenditures in Schedule 3 also if he incurs it from the international credit card. So simply exemption of EFC, RFC account, exemption of EEFC account, and exemption of international credit card. Now, this is the note for the liberalized remittance scheme. It is the same that we have discussed. That is para 1, schedule 3 of current account transactions amendments, that from April to March, any permissible current year, you have to see that the combination of both the capital and current account transactions have to be seen for utilizing the 250,000 USD dollar. Now, if the remitter is a minor, means LRS declaration form has to be countersigned by the minor's natural guardian. This scheme is not available for the corporates and partnership form. Simple. Consolidation of remittance of family members against for family members, individual family members shall be complying with the terms and conditions. Exception is for the clubbing is not permitted for the capital account transaction. It says otherwise consolidated family members amounts can be applied for the current account transactions, but for the capital account transactions, the clubbing is not permitted, means you cannot club it. Means you cannot join the payments. Like you cannot say that together we are making the payments, such as bank account, investments, purchase of property, if they are not co-owners or co-partners of the overseas bank. So clubbing is not permitted by the other family members. That means mother, father, and together using the USD dollar. Here they are clubbing it, 250,000 individually. But here, 350,000 are not allowed for capital account transactions. You cannot club. So you have to have separate 250,000 USD dollar limits. Now let's move to the last topic of today's discussion, that is capital account transactions, and its opposite current account transactions are contained in E and J of section 2. We have already discussed what are capital account transactions. These are the transactions which are, see, it says broadlining the concept. These two transactions are same as we have understood. Current account relates to profit and loss revenue items. Do you agree with this thing? And if you're affecting the balance sheet and capital items, they are capital account transactions. Why? Because assets and liabilities are always part of your balance sheet. So if any asset and liability is created in India, or assets or liabilities including contingent liabilities outside India are being altered, then it is a capital account transaction. So my question to the class is, if in India, we have to include contingent liability, yes or no? If we are seeing assets and liabilities held by PRO in India, do we have to include contingent liabilities? No, ma'am. Good. And outside India, if we are holding, then it is assets, liabilities, as well as contingent liabilities. A transaction which alters the assets, liabilities in India of non-resident fall under the category of capital account, and which are alter the contingent liabilities outside India are also capital. So outside India, you have to include the contingent liabilities also. After that, it simply tells you that you can sell or draw foreign exchange to or from the authorized person only. Who is the authorized person? Authorized dealer, offshore banking unit, the specific authorized person who can deal in the foreign exchange or foreign securities, money changes. Okay, na? Reserve Bank had the power to specify capital account transactions which are permitted and the relevant terms and conditions. Non-debt instruments are transferred to central government. RBI have the power to regulate debt instruments. So earlier what was happening? Non-debt means the asset-related instruments. Children, Finance Act 2015 regulated that earlier the asset-related, the asset created means if any asset has been created which is a non-debt transaction, then central government was ruling it. If it is any debt instrument that is liability is created, then RBI was ruling. But now from 15th October 2019, an amendment has happened which says that RBI and CG both will now regulate the debt instruments as well as the non-debt instruments. So both central government and CG will bring their policies together for the debt and non-debt instruments. Debt means liability create karna, non-debt means the assets creation. Reserve Bank or CG shall not impose restrictions for the payment of amortization of loans or depreciation of investments. Now, this is very, very interesting. What is the meaning of amortization of loan? Can anyone tell me what is the meaning of amortization of loan? So this is all beautifully written for all of you in the presentation also. Any person can draw and sell the foreign exchange. Central government in consultation with RBI can use it. This has been now deleted because now together they are going to hold it. Okay, let's see over there only because amortization of loan. Amortization of loan. Yes, everybody has answered me. Payment of the loan, reducing the amount of loan, repaying the principal, like depreciation. Very good. So it says when you are amortizing the loan, when you are paying off the money of loan amount, or you are depreciating your assets on direct investments in the ordinary course of business, for such transactions, no approval is required. It says central government will not impose restriction means इसके साइड पे आप अपने notes में लिख लेना no approval is required for such transactions. No limit has been set up for amortization of loans means paying off payment, repayment of the loan, or for the depreciation of direct investments in the ordinary course of business. Why? Because it is a current account transaction. When it uses the word ordinary course of business, it means it is a current account transaction. Further, it says RBI is now going to regulate the transactions for equity as well as debt. For assets and liabilities, both it will be telling. And again, central government will tell for the debt. Earlier it was for the non-debt instruments. Now both of them together has been doing. This list has been deleted. So we already understood that we have to now do both the transactions together. RBI and central government will now be specifying what capital and current account transactions they are permitted and they are allowed for debt as well as non. Now, first we are going to talk about the person resident in India can hold, own, transfer, and invest in the securities. Yes, Khushbu, absolutely correct. This is a very beautiful explanation of amortization that you have given. That's correct. Khushi correct, Pooja correct, Swati correct. Good. What about our Mr. Vijay Multani, the only child who is there with us? Ma'am, commission वाला point फिर से समझा दीजिए. 6 lakh वाला example नहीं समझ आया. So yes, Meghna Naik is also there now with us. Ardhana Avasti, good. Okay, so that point was specifically related to the commission. Just remind me at the end. I will explain you when we're going to end the lecture. Okay. All right. So person resident in India can hold, own, transfer, or invest. Means he can either hold the property, he can own it, he can sell it, he can invest in foreign currency, and he can acquire the property when he's a resident outside India or inherited from a person who was resident outside India. So there was Mr. A who has been staying in US from last 10 years, and now Mr. A has died, and his son Mr. B, Mr. A had a property in Dubai. Can Mr. B get that property? It says yes, when he was a resident outside India, if Mr. A has acquired this property out when he was outside India, either you can acquire the property when you were outside India, or you can inherit it from a person who was resident outside India. So if his father, Mr. B's father, Mr. A, he was a resident in Dubai, he has acquired the property. So Mr. B can also acquire this property, even if he is a person resident in India. Okay. So person who is a resident in India can acquire, own, and transfer the foreign currency or immovable property which is situated outside India, for example, in Dubai, which was acquired by him when he was resident outside India. So in year 2019-20, when he was a resident outside India, he purchased this property. Now he can still hold and transfer this property, and even his son can inherit this property, which is outside India. Shah Rukh Khan is having number of flats in Dubai. His children can also inherit it. When he'll die, his children will get the inheritance of this outside property. Is that clear? Now again, so many circulars are over here, so you don't have to remember the name of circulars, but since it is given 9 January 2014, a new circular came which talks about the following transactions to be seen. Let us talk about section 6, subsection 4 of the Act covers the following transactions. It says foreign currency accounts opened and maintained by such person when he was a resident outside India. So Mr. A in Indian has opened up a bank account in USA. He was working in USA. He has opened up a bank account in USA when he was a PROI. He can still keep this bank account open because it is a capital account transaction. This is a capital account transaction. Circular number 90 dated 9 January tells you that these following are the capital account transactions. कौन सी capital account transactions होती हैं? Foreign currency accounts means an Indian citizen has opened a bank account in foreign when he was a PROI, then he can still have this account open because this is a capital account transaction. Any income earned by way of employment, business or vocation outside India or commenced when he was resident outside India, or any investment he has made when he was resident outside India, any gift or inheritance when he has received, this is also a capital account transaction. All the assets and liabilities that we're creating, right? So here you're earning the salary income from the business or employments or whatever work you have taken up outside India, or you have invested something, any house you have purchased outside India, you have sold it, any gift inheritance you have received, all these are the capital account transactions. Foreign exchange, including income arising from the conversion or replacement or accrual of the same held outside India by a person resident in India acquired by inheritance. It is the same case. Shah Rukh Khan dies, his children gets the property inherited from outside India. Now, if they convert it, they replaced it, whatever income foreign exchange is involved, it is a capital account transaction. A person resident in India can freely use all these eligible assets abroad after they return to India, making the payments, fresh investments without the approval of RBI. Now, there is a person resident in India. He's holding any asset in foreign country, say USA. Now, when Mr. A, who is a PRI, he sells his asset in USA, then whatever money that he gets from that asset, suppose he has got 5 lakh USD dollars, he can freely use that. No permission is required for utilizing this amount. So you can write down at the side of fourth point, if a PRI is having any asset in foreign country, he sells this asset, he can freely utilize the amount that he has received from the sale. No permission is required. No permission or approval of RBI is required. Is that clear, all of you? Okay. Now we have been talking about the person resident in India. Children, it was the 6th subsection 4 point related to person resident in India, capital account transactions of a person resident in India. Now we are going to talk about a person resident outside India. Like a person resident in India can hold a property in Dubai, can inherit it also in Dubai. Similarly, a person who is a resident outside India now, a US citizen has come to India, he can also acquire or inherit the property from a person resident in India. It is reverse of the same thing. You were in India, you went outside India, you purchased the property, capital account transactions. Your son or children inherited from you, capital account transactions. You are a person resident outside India. Can you hold, transfer, invest in the Indian currency when he was a resident in India? Yes, if he has stayed more than 182 days or the conditions that has been written, he is complied with that when he's a resident, he has acquired this property or he has inherited from his ancestors. Yes, he can hold, own and acquire this property. Reserve Bank may regulate the establishment of an India branch outside India for carrying out such activities. Without prejudice, it says RBI can regulate the conditions how the branches and other businesses are going to be managed. But yes, these are permissible capital account transactions. So PRRI can hold, transfer, invest in foreign currency, property situated outside India if it has been held by him or acquired by him when he was a resident outside India. Similarly, a person who is outside India can take the property in India provided the same was acquired by him when he was a person resident in India or inherited from the person resident in India. Is that clear, children? Everyone is clear about capital account transactions. Capital account transactions का definition ही थोड़ा tough था, जिसमें आपको understand करना पड़ता है. इससे direct related questions can also come. Okay, now we will just quickly go through the transactions which are permissible, transactions on which restrictions can be imposed. Similarly, you had current account transactions. In the same way, you have capital account transactions. So what are the transactions which are permissible by the person resident in India? A person can invest in the foreign securities. You can make the investment in foreign securities. You can take foreign currency loans in India and abroad by a person in India. So you have taken up any loan in India or by a person outside India. You can still take a loan outside India also, inside India also. Transfer of immovable property. For example, you have a property in Africa. Can you sell it? Yes, you can sell it. Now, there is guarantee given by a person resident in India in favor of a person resident outside India. Now, Mr. X is taking a loan from a bank in foreign country, and I am giving the guarantee to the bank that please give money to Mr. X. He will repay. Tomorrow, if he will not repay, then my guarantee will become my contingent liability. Outside India, we also include contingent liability. Yes, child, Swati, in that case also no approval is required. It is the same for PRRI and PROI. In the definition of capital account, you don't need the proof. So this guarantee point is very important because here contingent liability is involved, because contingency will arise only if Mr. X fails to repay the loan amount. Then I have given the guarantee, I will have to pay. So this is the contingent liability and I am a PRI. So it is a capital account transaction. Similarly, on the exports imports, you're paying. Loans and overdrafts is your liability that you're creating. Loans and overdraft by person resident in India is your assets that are being created in India. All right, undertaking derivative contracts, all these kind of capital assets remittance you can make. So all these points are related to your assets and liabilities that you're creating inside India or outside India. Now, Schedule 2 talks about the permissions of the permissible transactions by the person resident outside India. So a person who is a resident outside India, what all transactions are permitted to him? Number one, he can make any investment in India by issuing the security by a body corporate, or investment by a person resident outside India, or by contributions in the capital of the firm. So Mr. John comes from India, he wants to make any investment in India, it is a permissible class of transaction by a person resident outside India. Can he acquire any immovable property? Yes, he can acquire any immovable property in India. Can he give the guarantee for any person? Yes, he can give the guarantee. So the same points that are written A to H, A to K over there, A to H are the similar points over there. Person resident outside India, these are permissible transactions. Person resident in India, those are permissible transactions. Now he can also give the guarantee in favor of another person. Is that clear? All the transactions are same. Transactions with no restrictions. We have already done amortization of loan, depreciation, no restrictions are required. Prohibited transactions. Now, these are prohibited transactions where the restrictions have been imposed. What are the restrictions? Reserve Bank of India imposes prohibition. कहते हैं ये वाली जो transactions है इसके ऊपर RBI has imposed a restriction. No person shall undertake, draw or sell foreign exchange from an authorized person for any capital account transactions unless a person cannot undertake, sell or draw foreign exchange Now, children, it is trying to tell you RBI has imposed certain restrictions on these prohibited transactions. It says you cannot draw, sell, or use foreign exchange. Means there is a prohibition on utilizing of foreign exchange for which transactions? A resident individual drawing it from the authorized person not exceeding USD 2,50,000 per financial year or the amount as decided by Reserve Bank. This is the same liberalized remittance scheme that they have made in the current account transactions. They are saying the same scheme is applicable from time to time for the capital account transactions also. Have you understood? The same scheme which was there for current account, same schemes 2,50,000 USD applies to the capital account transactions also. Where the foreign exchange drawl exceeds 2,50,000 or as decided by Reserve Bank, a limit has been set up for the per transaction, so you cannot exceed that. Here, the remittance directly or non-directly to the non-cooperative countries or the territories by the FATF, that is Financial Action Task Force, as has been communicated by the Reserve Bank of India. So they have specified these are the countries to which you cannot make the prohibition or have been put up on utilizing the amounts in these countries. After that, children, there are certain prohibitions for making the investment like in chit fund, except where the state government approval has been given. If state government is giving the approval, then you can invest in the chit fund. For these specific investments by PROI, there is a restriction. Likh lo side. These specific investments, there is a restriction on person resident outside India. He is prohibited from doing these investments in India, except where the state government, only for the chit funds where the state government has given the permission, you can do it. Otherwise, outsider cannot come and do the business of chit fund. Outsider cannot come and do Nidhi company. Outsider cannot do agriculture and plantation because it is our main India is a hub of agriculture and plantation. We cannot give you a right to come and set up your agriculture business over here. Real estate is another main business that we have been doing. We cannot give you a right to come and develop your townships and construction of residentials. Okay. But this will not include your townships and construction of residential commercial buildings. If they have been permitted under SEBI, those can be done. But otherwise, farmhouses and real estate business related to farmhouses cannot be done. And the last is transferable development rights, TDRs. They are the certificates which are issued in respect of the land acquired either by the central or state government by surrender of the land without monetary compensation, which are also these kind of transactions which are being permitted in India. A person resident outside India cannot take up these particular kind of transactions. So if I ask you, person resident outside India, can he set up a Nidhi company in India? Can he make the investment in Nidhi company? Yes, ma'am, or no, ma'am? Hurry up. We are on the last page now. Can he make up? Meghna says yes, ma'am. Okay. Vijay Multani. This is for the previous one. Okay. No, ma'am, is the correct answer because these are the prohibited transactions. Okay. Khushi, Pooja, Khushbu, Swati, all of you correct. Good. So last point says no person who is resident in India can undertake any external affairs with a person who is a resident of Democratic People's Republic of Korea or the People's Republic of Korea they have been formed. So it says there are certain transactions which you cannot do with the Democratic Republic of Korea until the approval of central government has been taken up. These are the particular transactions where you need the approval. If you have not taken the approval from the central government, you cannot carry out such kind of transactions. And the last point is existing investment transactions with any person, again with the Republic of Korea, they have put in the restriction that per person resident in India which is not permissible shall be closed, liquidated and disposed and settled within 180 days from the date of notification. So this notification came on children 21st April 2017. क्या notification आया था कि कोई भी capital account transaction cannot be done with any citizen of Korea or any Democratic People Republic of Korea. And if you have already done this investment with the Korean people, then a period of 180 days will be given to you from the date of notification. You have to close it, liquidate it, unless you have taken the approval of central. So the capital account transaction is permitted only if it is specifically permitted under the regulations. If it is not permitted, then a specific prior approval is required. Now, this is your chapter number, last chapter 3 of other chapters. That is FEMA. We have completed all these questions, MCQ based question, descriptive questions. Children, please revise it. Please do it nicely. Anyone having any doubts? We still have 10 minutes left. So we will try to take up certain questions because it is a very complicated chapter. It is very easy. Did you find it interesting or you find it tough? How do you find FEMA? Tell me, children. Let's have some interaction today. Do you find FEMA easy or do you find tough? Vijay Multani, you wanted to ask commission wala point. Which point? I will take you to that page number. You can ask me, child, now. You find it interesting. Capital account transaction meanings, Khushbu. Capital account transaction basically mean where any asset is created or liability is created, whether outside India by a person resident in India, or an asset liability or contingent liability is created outside India by a person resident in it, or in India by a person resident outside India. Okay, but that is what you have to see. Section 6.4 and 6.5, all the transactions which are permissible by PRRI and which are not permissible. For PROI, we have done the prohibited transaction also. So capital account में आपने सिर्फ asset and liability create हो रहा है या नहीं ये देखो. Current account में ज़्यादा headache वाला है because you have 3 different schedules where you have to learn schedule 1, 2 and 3. That is also very simple. Simple schedule 1, prohibited transaction. No drawal of foreign exchange. If I ask you for the lottery tickets, racing, all those kind of expenditures, can you withdraw the money? No, ma'am, it is strictly prohibited. For tourist, private visits, for your traveling, medical expenditures, for study abroad, yes, ma'am, 2,50,000 USD is permissible. Then you come to your schedule 3, all those surface motor transport and all these approvals of the department is required. Then you talk about the approval required for the army. So this is how you have to learn it. You have to write and learn all these kind of transactions. All right. So shall we take up MCQs or should we take up descriptive questions? I think descriptive questions would be better because MCQs are too long, but you should read them because similar kind of MCQs come in the exams. So Printex Computer is a Singapore-based company. They have several business units all over the world. They have a unit for manufacturing computer printers with the headquarters in Pune. Now, it is a company incorporated outside India having headquarters in Pune. It has a branch office in Dubai, which is controlled by head office in Pune. Can you tell me the residential status of the printer units in Pune and of Dubai branch? Now, this is a specific case of a company incorporated outside India having a place of business in India, but what is the residential status? If any branch office which is owned and controlled by a person resident in India, it will also become a person resident in India, and vice versa is also true. So what will you say here? A person resident outside India, Singapore based. So that is a person resident outside India. They are having any agency office controlled by such person. So the term appears that the person under clause 1 to 6 that have been referred will be a branch, would be a person. So first you have to include the definition of person also. Okay, a person has to be included. A person resident in India under this clause will be an office, branch, agency owned or controlled by a person resident outside India. Therefore, the Pune unit will be considered as the person resident, has been controlled by a person resident outside India. Hence, it would be a person resident in India, although it is being controlled by a Singapore branch. But since the office has been set up in India, it will be considered as a person resident in India. Dubai branch is not controlled by the printer unit, which is a person. Therefore, it is a person. Therefore, Dubai branch is also a person resident in India. Both are PRI. Are you clear? Okay, now let's see the second question also. Mr. Sain, Indian national desires to obtain foreign exchange for the following purposes. Can he take 50,000 US dollar out of winnings on lottery tickets? Sale of agent commission. Okay, Vijay, I will explain you that point. Sale of agent commission. Meanwhile, please answer me the second point. So where you were paying, are you asking about the other than individuals approval of RBI require, Vijay? Sale of commission, where you need to pay the commission to the agents per transactions for the residential plots and commercial plots in India exceeding 25,000 or 5% of the inventory. Okay, that point you have not understood. So I said I have sold a plot in Dubai. It was sold for 6 lakh rupees. So 5% of 6 lakh that we have taken was 30,000 USD dollar. 6 lakh USD dollar we have sold it. So 30,000 USD dollar or 25,000 USD dollar, whichever is less. So what is the commission? That was the price that we have sold up. Inward remittance is the amount that I have received. 6 lakh USD I'm receiving. So 5% is 30,000 or 25,000. So whichever is more. So 30,000 USD is more. Now, if I want to pay to the agent who has sold my flat, can I pay them the commission? So it says per transaction, 30,000 USD dollar you can pay the commission. No approval is required. But beyond that, if you want to pay the commission, then approval of RBI will be required. And this is particularly for the case of other than individual. All right, Vijay Multani, I hope you're clear on this point now. And I hope my students have answered the second one now. What is the answer to the second one? Sending the cultural tour for US, you need the approval from HRD. And first one, it is strictly prohibited. You cannot send the money outside India. How you have to write the answers. This is the way you have to express your answers, children. Now, writing is very, very important. You have to learn it. You cannot say just yes and no in the exam. For that, I understand the feeling that you have at your heart, children. Your exams are just approaching very nearby. So my humble request to my dear students, learn it as far as possible. LLP, FEMA, these are very scory chapters. If you have learned them, grabbed them, then it becomes very, very easy for you. At the same time, the Companies Act chapter, book number 1 is very simple because it has a conceptual clarity. Your chapters related to prospectus, share capital and debentures I have done with you in revision, MGT I have done with you in revision. So all these chapters are very, very interesting. You can go through the recorded lectures also of the revision that we have done, so that on the exam day, you can just flip the pages and you can listen to this recording, which will help you to retain the information. But learning has to be done. Okay, in those, book number 1, if you'll ask me, not much of learning, it is much of understanding. Book number 2, a lot of learning, accounts of companies audit. But again, samajh ke karoge, then it is very easy. But FEMA is hardcore learning. So you have to, you don't have to write all this, that add these rules for exchange. So you will simply write there are certain transactions, current account transactions, which are prohibited. And there are certain transactions in which the approval of central government is required and certain transactions where approval of RBI is required. Itna to yaad ho hi gaya hamein. फिर हम लिखेंगे for the item number 1, it is the lottery winning. Remittance is made as per the first schedule of FEMA. Therefore, he cannot withdraw because it is a prohibited transaction. In the same way, you have to write for the next one also. All right. So this is how you have to learn it. This is how you have to do it. I hope you enjoyed doing the revisionary sessions with me for FEMA. And I'm wishing all the best to all my dear students. I really look forward that you get passed in your CA intermediates and you become CA finalist very soon. But the only request is keep doing writing practice. This is only the time that you have to study, children. And once you have completed your studies, when you see your result, you feel very happy for that. All right. So study well. Thank you. Thank you so much, Swati, Khushbu, Pooja. You all have been wonderful audience and students and all those who are with us on the live also. Thank you so much. Thank you, Vijay. All of you, Meghna, Aradhana, Vasti, Khushbu. Thank you, Khushbu says we have enjoyed the class. I have also enjoyed teaching you. Thank you, Archana. Thank you, children. And I wish you all the very best. Thank you, Sunil, Ganga, Dev. Anyone has any doubts, you can raise your hands and ask your doubts also. But I'm sure all the doubts have been very well taken care of. And writing practice of descriptive questions of FEMA also you must do, children. All right. Thank you so much, children. If you don't have any doubts, then we can wind up the session. All right. Thank you, Meghna. Okay, children. All right. Thank you so much, students. So we can end the session. It's over. Yes, yes.